Hello and welcome to AE Accounting Tutorials. We are continuing our lesson on accounting for branches. But in this particular video, I want us to look at how to record branch transaction when using the stock and debtor system. In the part 1 of this video, we've looked at how to record branch transaction when using the debtor system. That is where we said that we have two broad categories of branches. That is dependent branch and independent branch. Where we said that dependent branches are branches that depends mainly on the head office in operating their activities. That is to say that for dependent branches, they don't prepare their own set of books. It is the head office that prepares books on their behalf. So under the dependent branch, we also established that we have three basic methods in recording branch transaction. The first one has to do with the debtor system, where we have to open one branch account or one big account called branch account in the book of the head office to determine the profits that is made on the branch transaction. That is where we debit all the opening balances of assets and credit all opening balances of liabilities and make the necessary entries to determine the profit made on the branch transaction. But this time, our focus is on when recording branch transaction and we are using the stock and debtor system. Is that okay? I said we have three basic. We have the debtor system, the stock and debtor system, and the final account system. Is that okay? But our focus today is on the stock and debtor system. We've already looked at the debtor system. Is that okay? We have about 5 basic accounts that are prepared by the head office when using the stock and debtor system. So we are to look at these 5 basic accounts and how the double entry exists in this account. But sometimes it becomes 6. The reason is that sometimes goods are transferred to the branch at cost price. Sometimes they are transferred at market value or invoice price or selling price. Is that okay? So when goods are transferred at cost price, we maintain 5 set of books. When it is maintained at an invoice price, we add another account called stock adjustment account, branch stock adjustment account. Is that okay? So let's look at the 5 basic accounts. The first account I would like to talk about is the branch inventory account. So the first account is branch inventory account. Branch inventory account or branch stock account. The second account I would like to talk about is branch debtors account. Branch debtors account. And all these accounts have their own function that they performed. The third account I would like to talk about is the goods sent to branch account. Then I will also talk about the branch profit or loss account. Then finally, I talk about the branch expense account. Branch expense account. What I'm saying is that when goods are transferred at cost price, this account becomes very relevant when we are using the stock and debtor system. So when we are using the stock and debtor system of accounting for branch transaction, then this 5 basic account becomes very necessary when goods are being transferred at what we call cost price. At cost price. Is that okay? But sometimes the head office of the branch may decide to transfer the goods to the branch at an invoice price or selling price or market value. When that happens, one key account becomes very necessary that we have to also consider. And that account is called the branch stock or inventory adjustment account. Adjustment account. This branch stock adjustment account take care of the profit component that is added to the cost price. I said when we are transferring the goods at an invoice price or selling price or market value, then this account will be added to the first five. Is that okay? And there is a profit margin that will be added to the cost price before we will have an invoice price. This means that will be a profit percentage added to the cost price. Is that okay? So the profit percent that will be added to the cost price, this particular branch adjustment account will take care of that. Is that okay? So we will look at how to prepare this individual accounts by looking at each double entry. So just follow me step by step as I take you through. So as I said it earlier on, these are the 5 basic accounts that are opened or prepared when using the stock and debtor system. That is when goods are transferred at cost price. So at cost price, when goods are transferred at cost price, using the stock and debtor system, we have these 5 basic accounts. And I said that when goods are transferred at invoice price or selling price, that is when a profit margin is being added to the cost price to arrive at selling price or invoice price. We add one important account we call branch stock adjustment account. This branch stock adjustment account take care of the profit component that is being added to the cost price. Is that okay? So we look at that as well. So now let's look at the functions, the purpose, and transactions that are entered in these 5 basic accounts. Is that okay? Very necessary. So follow me as I take you through these basic steps. So in summary, this branch inventory account function as that of the trading account of a normal sole traders. And this account is basically prepared in order to ascertain what we call the gross profits on the branch transaction. Is that okay? So we prepare this branch inventory account in order to determine what we call the gross profits on the branch transactions. So I'll take you through the items that will be entered in this account. And this branch debtors account, it is basically prepared in order to determine the amount due debtors at any point in time. Is that okay? That is branch debtors account. Then we talked about the goods sent to branch account. Goods sent to branch account, it is basically prepared in order to determine what we call the net purchases or the purchases of the branch transactions. So, okay, that is when goods are sent to branch, we record it here. When there are returns of goods from the branch to head office, we record it here at the debit side so that the net balance will be the purchases figure that will be transferred to the trading account of the branch. Is that okay? Good. And this branch expense account also take care of all expenses that are incurred during the branch activities. Is that okay? So the branch profit and loss account also is basically prepared in order to determine the net profits or loss on the branch. So now what we have to do is to focus on the double entry that exists between this account. Before we look at the double entry, also take note that this branch inventory account also makes sure that the movements in the goods are realized. Is that okay? So to know the double entry of this, the first thing we have to consider is that there are, in most cases, there are opening balances or balance brought forward in these 2 accounts, this account and this account, because this might not be the first time the branch are operating. They might be in operation for some number of years. So there might be opening balances of the branch inventory that has been transferred from the head office, and there could be debtors balance as well. But remember, these accounts are open in the book of the head office. So we could have a balance brought forward of inventory this way, because inventory is an asset, it has a debit balance. Yes, that is a simple explanation I can give you. Then we can also have a balance brought forward or brought down, and it's not in all questions. It depends on the question. There are some questions there are no opening balances. Debtors is also an asset, has a debit balance, and this makes sense. So after recording the opening balances, the next thing to look at is when goods are transferred from head office to branch. So when goods are transferred from head office to branch, the double entry is that we credit goods sent to branch account and debit the branch inventory account. We credit goods sent to branch in the name of branch inventory. So branch inventory this way. Then we come to debit the branch inventory account in the name of goods sent to branch. Is that okay? This way. The third transaction I would like to talk about is that when sometimes the goods are transferred to the branch, some of the goods might not meet the demand of the branch. So the branch will return such goods back to the head office. So when there is a return of goods from the branch to head office, we credit to the branch inventory account and debit goods sent to branch accounts. So this way, we credit this is as a result of return. Okay, return to head office. So goods sent to branch account, then we credit. We come and debit this. It's also as a result of return, and it is from branch inventory. Branch inventory, then we debit. That is that. So the next thing to consider after receiving the goods from the head office is that now the branch can begin to make sales. And these sales will be in the form of either a cash sales or credit sales. Now, if the branch makes sales, it means automatically the goods that is with the branch will reduce. So we credit the branch inventory account as a result of a cash sales. So the corresponding entry will be at the debit side of the branch cash account. Is that okay? The reason why I didn't open the branch cash account is that it is not much relevant because most of the head office will ask the branch to open a local bank account with the branch where every sales will be deposited. Is that okay? Good. I said that sales will be either in the form of cash sales or credit sales. So the corresponding entry of the cash sales will go to the branch cash account. So if it is a credit sales, if it is a credit sales, then we credit this. But remember, this credit sales, the corresponding entry will go to the branch debtors account because the goods are sold on credit. But remember, it is from the branch inventory account. So let me do it BI, then we debit. Sometimes what also happens is that after the goods are sold to the branch customers, sometimes they also return some of the goods back to the branch when those goods did not meet their requirements. So when that return happens, we credit the branch debtors account and debit the branch inventory account. So we debit this and it's as a result of return, but from branch debtors accounts. So we debit. That is when the branch customers return the goods. So this is returns, but it is going direct to the branch inventory account this way. Now, because the branch sold some of the goods to the branch customers on credit basis, they will make payment later. So when they make payment, we call that a cash receipt. So when there is a cash receipt from the branch debtors, it reduces their balance. So we record at the credit side as cash receipt or cash received this way. And this cash received will be debited to the cash account. Is that okay? Yes. So the cash account is not that relevant over here. I told you that a local bank account will be opened with a branch to be making all those cash deposits. Is that okay? Afterwards, if there is any discount allowed to the debtor, we record at the credit side. So let's say discount allowed. We record it here. But remember, this is an expense that will be debited to this account. So we can come and record the corresponding entry as discount allowed. this way. There could be, let's say, bad debt. There could be a bad debt that will reduce the branch debtors balance, and it is an expense that will come to the branch expense account as bad debt this way. Is that okay? So any transaction that reduces the branch debtors balance will be credited. Any transaction that increases their balance will be debited. The same way, any transaction that increases the branch inventory, we debit. Any transaction that decreases the branch inventory, we credit. I hope this is clear. Now, so these are some basic transactions that you find in these 5 accounts. But there are other transactions that I might not mention. But then, with understanding of the concept, you should be able to record. So any other expense should be recorded. Any other expense should be recorded at the debit side of branch expense account. So let's say there is also a general expense. We have to record that. After recording the entries, the next thing to do is to balance off this account. By balancing off this account, I told you that the branch inventory account, it is purposely prepared to determine or ascertain what we call a gross profit. So it functions as that of the normal trading account that you are aware of. Is that okay? So you see, we have a balance brought forward or a balance brought down on the branch inventory account as an opening balance. So the question can give you a closing balance. So if there is an opening balance at the debit side, automatically the closing balance will be at the credit side. So we will have a balance carried down at the credit side this way. Is that okay? So to balance off this account, we sum up the totals. In most cases, the credit side becomes the larger one. So the difference will appear at the debit side of the branch inventory account. And this difference, we call it a gross profit. Is that okay? So this gross profit will be transferred to the profit and loss account. So P and L, but then it is a gross profit. It will be, because it is a gross profit, it will find itself at the credit side of the profit and loss account. But if the difference happens to be here, then that will be a gross loss. But in most cases, this is why we normally get yes. So that the balance brought down will come here. The balance brought down will appear over here. So I said this will be transferred to the branch profit or loss account. Is this clear? So we can quickly do that. So a gross profit from the branch inventory. So branch inventory, but it is a gross profit. So gross profit to be recorded this way. Yes, we've completed this account. Now let's also balance off this account. Is that okay? So by balancing off this account, we have to also find the difference. In most cases, the credit side is always bigger than the debit, because the goods sent to branch will be definitely higher than the return that the branch has made. So to balance off this account, the credit is always the bigger. So the difference that we will have here will be the net purchases, or the purchases figure that will be transferred to the trading account, because purchases are found at the trading accounts of a normal sole traders. Is that okay? So the difference here will represent a purchases. Is that okay? It is purchases because the total goods of this is sent to the branch. The branch has returned some. So the difference, it is the goods that is with the branch. So the branch will consider that as purchases. So that is that. So this will be transferred to the trading account of the branch as purchases. Is this clear? Now, let's also balance the branch debtors account. So to balance the branch debtors account, it is very simple. So to balance off the branch debtors account, in most cases, the debit side is always bigger than the credit side. So we assume that the difference will be the balance CD at the credit side, then the balance brought down will be at the debit side as simple as ABC. Is this clear? Now, if we want to close the expenses account, it is also simple as well. So to do that, you have it this way. Now, the expenses will not have any balance carried down or brought down. The expenses account need to be closed because the expenses has to be matched against the revenue generated. Is that okay? So these expenses will be transferred to the profit and loss account. So we will have profit or loss account this way. This is an account, P or L account. Yes. So the total of this will be recorded here. So because the P&L is at the credit side, we will come and debit the profit and loss account, and it is from branch expense. Is that okay? So this is branch expense. And the branch expense, the total, this total will be debited here. Now, we compare the branch expense against the gross profit. By comparing that, it is very simple. In most cases, the gross profit is higher than that of the branch expense. So to balance off this account, there will be no balance carried down or brought down. So the difference will be what we call the net profit. The net profit. And this net profit is actually the branch net profit. So basically, this is how we record transactions in the 5 basic accounts that are prepared under the stock and debtors system when goods are transferred at cost price. But I told you that when goods are transferred at selling price or invoice price, we add another account called branch adjustment account. And the branch adjustment account take care of what we call the profit component. The difference between the cost price and the selling price is the profit component. And this profit component will be recorded in the branch stock adjustment account. In that case, the branch stock adjustment account will determine the profit on the branch, not the branch inventory account anymore. Is that okay? So basically, this is how we do that. But with the branch stock adjustment account, we will look at that in a subsequent video. We will take a practice question. So when we are solving, we will actually appreciate how that works as well. So if you are new to this channel and you haven't subscribed to this channel, I will encourage you to kindly subscribe to this channel. You turn on your notification bell so that any moment I upload any new video, you will also get notified on your devices. So in our next video, we will take a practice question, then we solve together to enhance our understanding on this. So till we meet in our next video, I think it is bye for now.